Thank you everyone from the Plug and Play ecosystem for joining us today. My name's Ash Tudica. I'm with the InsurTech vertical at Plug and Play. I wanted to thank everyone for tuning in and staying safe during these trying times. I'm going to start with some welcoming remarks and setting the stage for the thesis of today's Fireside Chat. Then we'll dive into a Fireside Chat with Dale Hall from the Society of Actuaries, and that'll follow up with 3 startup presentations and closing remarks. So COVID-19 has created an atmosphere of unprecedented strain and risk for both the consumers as well as life insurance carriers. In fact, McKinsey just released a report on how life and disability policies are increasing in sales dramatically during COVID. But how are carriers ultimately going to manage this new risk, especially with rising mortality rates? With crisis comes invention and innovation, and we're truly in an era which will compress timelines for embracing digital transformation. COVID and black swan events will ultimately drive the need to deploy new digital mediums of insurance distribution, fintech and alternative payments, tele-underwriting, and harnessing big data, artificial intelligence, and population health to help manage this risk, especially with rising mortality rates and new risks. So how do we adjust underwriting, ingest new data streams and population health data? With new risks like COVID, underwriters are forced to take a more dynamic strategy to properly manage their risks. So this creates a huge opportunity for insurtech startups that harness population health data, demographic data, geographic data about the consumer to better model and assess and manage that risk. There'll also be a huge opportunity to educate consumers during these black swan events and changes to the distribution models as well. So consumers are now working mostly from home during social distancing, and there's an increasing need to educate them about the importance of helping their family manage their risks during these trying times. There's also going to be a tremendous opportunity for digital payments and fintech. Consumers now are living more remote lives, and there's an increasing need to enable consumers with alternative payment models and harnessing fintech innovation. Mobile payments are now the only option for many consumers, and many of these older demographics might need education to adopt these new payment mediums. Today we're going to be speaking a lot about how we manage risk in this new crisis and how we use early stage innovation and startup innovation to help really assess and manage risk in these trying times. So with that, I'd like to introduce Dale Hall from the Society of Actuaries. Good afternoon, Dale. Could you tell us a little bit more about your role with the Society of Actuaries? Dale, I think you're muted, actually.
There we go. Sound good?
Sounds great.
All right. No, great to be here, Ash. Thanks for the introduction. I think you've painted a good, appropriate picture of the current landscape. The Society of Actuaries is the organization that does education for actuaries through examinations. Myself, I went through those examinations to become a fellow of the Society of Actuaries. And then we do a lot of professional development, continuing education. So through events, doing education and training for actuaries for information they can use in their own work. And then finally, in my part of the organization, we're a research organization as well. We do tons of different projects that are helpful for actuaries to use in their day-to-day work. These could be from experience studies where we aggregate information from the insurance industry or pension funds to create tables for actuaries to use, or just practice research projects, kind of bringing the profession up to speed on current event topics. Probably the most recent examples are our research briefs across a lot of different topics that we've been issuing on COVID-19. And if you need more information on that, just simply go to the SOA website at soa.org, pull down on our research tab and look for all the COVID-19 information that we've produced there.
Definitely, I was a big fan of the SOA's recent COVID and mortality rates white paper. I think it's very informative, especially for the audience on this webinar. So I'm curious, what's been the overall response from your members on COVID and the implications to underwriting? How are they adjusting their product design, their pricing, particularly in regards to rising mortality rates and these new risks?
Well, you used the word, I think, dynamic in your introduction. I think that's the right phrase to use. It's, as a new risk comes up, actuaries, underwriters are always looking for, how do I need to make a shift in the types of questions that I'm asking and the types of information I might be gathering through the application to make sure I'm not increasing my risk. And so you do see actuaries working with their teams, maybe not to do total new product design or change underwriting classes, but what types of information do they need to flex to in the current environment, and what types of information might they have been relying upon that might be less available. Attending physician statements used to be the norm. You'd get a history of the health of the potential insured that way. Unfortunately, with hospitals and being overwhelmed and medical offices being even closed, they're definitely less available, or the time you need to wait is way beyond what you'd want a consumer to do. Same thing with laboratories. There's been a push in the industry over the last 20, 30 years to see, I need to gather blood, I need to gather urine, especially for large face amounts. Those may be less available, as many of them are converting to be COVID testing centers. I think you start to think through, is this a shift to where electronic health records is a start from this event? Things that you can get electronically without having to rely on a physical location or a person to go do. Again, probably no immediate impact on pricing or design. That may come over time, but really just a more focus in the current environment to ensure that adequate underwriting to not increase risks through all the new business that can be written.
Definitely. I think there's going to be a tremendous opportunity for startups, leveraging interoperability and really removing these silos between all this patient data. And it's going to be, crucial for these actuaries with these managing new risks. So I'm curious, what's been the response from your members in terms of, managing risk overall? What are they doing for reserve valuations and, liability management? And especially, how are they making sure they have adequate financial reserves to weather and sort of survive this crisis?
Yeah, it's important in my mind to kind of look at both sides of the insurer's balance sheet in this environment. And some would say, while we might expect to have COVID-19 related insured life claims, that the economic impact of less activity, less trade, it could be somewhere more a 5 to 10 times larger asset event than a liability event. Asset values have been volatile. A lot of insurance companies hold fixed income assets that could be susceptible to downgrades, or if they're security or mortgage backed, what are the cash flows on the assets that support those securities? So a lot of risk management in the actuarial profession, I'm sure, focused on the concept of assets versus liabilities and doing testing to see how assets will play out. I think there will be additional claims for sure coming from the 2020 income statement. But I think the asset side is probably places where actuaries are looking at the longer term impact. How much will it affect our capital levels? How much risk-based capital will change for us to work with insurance regulators? We all will certainly be running additional cash flow testing and asset adequacy scenarios to see if there's a need for additional reserves. But I think it's a right time and a good time and a lot of actuaries are looking at their financial and risk management projections using assumptions that are updated, implied by what's happening for claims and for assets due to COVID-19.
Thank you. That's a really great answer. So I'm also curious, life insurance underwriting hasn't always drilled down into the geographic, demographic, and the population health data of the consumer, or the street level data of granularity of the consumer. So how do you see this changing in the future, especially with pandemics like COVID and these black swan events?
Yeah, you're right. It's not as if always we would use like someone's specific zip code, to trigger a whole bunch of underwriting questions. Maybe there's a lot of information that can be gleaned by where people live, socioeconomic and otherwise. But there's maybe a parallel where on the property casualty side, how hurricanes certainly impacted county levels and then down to specific zip codes and almost down now to geolocation, you start to think about, is there a need to do individual life risk analysis in that way? Don't know the full answer, but since population density is certainly a more correlated variable with death in this outbreak, you start to think, how might that be used in underwriting, or what type of additional segregation of risks might actuaries be thinking about? If someone works in a remote office with no one around them, or they're in the midst of a large office or production environment, does that expose them to new risk? Clearly other health variables still are more prominent, but something to consider. It probably even stems over to group life as well, where you may start to need to ask more questions about a company's production facility, their office environment, even what are the rules in the elevator for their building as their employees are moving around? How are they doing wellness checks for their employees? So I think there's a lot of additional questions, both for a specific individual and for underwriting a company that might provide group life, that start to enter into the equation.
Definitely, I think for both group life as well as individual life, there's going to be need to even harness maybe contact tracing data, or this very high granularity, geographic data, especially about the company's employees, right? That's going to create a tremendous opportunity for startups.
Yeah.
So I'm curious, if there isn't a vaccine for COVID, how will insurers adjust their underwriting based on this additional risk looking further down the road?
Yeah, I mean, I think the common thinking is, there's a couple paths that may happen. One, and maybe everyone's preferred path is, science and technology leads to a vaccine. And similar to like what we have with influenza, we go through a process, maybe once a year, maybe twice a year, and people can be vaccinated for that. And healthcare insurers would be incented for sure to make sure people had that vaccine to reduce employer healthcare costs. Another path, though, is probably like we've seen with other diseases. Maybe HIV is another virus example where, no specific vaccine, but medical technology and pharmaceuticals have evolved to be more therapeutical. They treat the symptoms. They kind of allow people to better contend with the disease. So, I think it's an important place for life insurers for sure to be monitoring what's happening in the public health world. It certainly impacts the way we interact with others through our distribution or customer service. It certainly will impact how telehealth or tele-underwriting processes will work. And then down to the individual level, you certainly want to make sure that you're understanding how a potential insured fits into either having access to vaccines or access to therapeutics.
So on the same topic, what role do you think tele-underwriting and remote underwriting will play in these future Black Swan events?
I think it's big. I mean, the crisis has kind of spawned innovation and invention here in a lot of ways. Or, if we thought it was a 2 to 3 or 4 year journey to get from point A to point B, maybe the accelerator got pushed down really quickly here. And instead it could be a 2 or 3 or 4 month exercise to get to where we are thinking. It seems that consumers now are getting a firsthand experience of what more technology for communication, for education, even for payment transaction will be. More people thinking about, well, I didn't really need to write a check here. Here's a way I can do that. Or I didn't need to necessarily walk into a distributor's office to have a conversation. We connected, and now I'm more comfortable going through a Zoom meeting to do that. I do think that the tele-underwriting process obviously has some value. Someone walking into someone's house, you certainly get a glean and kind of that field underwriting sense of what's going on. But if that's going to be more common to do that over a computerized connection, then trying to ask the right questions, glean the right information, do that sort of field underwriting, that is something that is becoming more common and quickly. And I think there's a big opportunity for startups or other technology companies to say, this is the way to optimize this, or here's how we can work with your consumer base, given age and demographics, to make sure that the right systems, customer experience all play out. We've been through this before. We've gone through, hey, isn't using the telephone good, or isn't using electronic funds transfer rather than writing checks good? And all that comes crashing in with the internet world. And I think there's just a huge opportunity to do more of that for the insurance industry, and quickly.
Yeah, I think especially with consumers now working remotely and embracing, Zoom or video chat, I think it's going to help the adoption of tele-underwriting. So
Yeah, I
I'm
think
curious.
the evolution was going to happen at some point in time, and maybe this is just a thing that spurs that pace to be faster.
Absolutely. So do you think, other black swan events like COVID in the future will really drive your member organizations or insurers to harness more big data, artificial intelligence, and really innovate their underwriting capability?
I really do. I mean, I think there's a lot of data to be collected. I think maybe even some out there where, like, we just need an event to happen where we put everyone working from home, or triggering a lot of this data just to see what the reactions are. Well, here we are, and you can sense a lot of people are actively, just absorbing all this data information of how consumers and work is done in the current environment. And when you start using more of that information and feeding it into, machine learning or artificial intelligence programs, there's a lot of helpful information that can come out the back end to say, these are the ways that your customers are thinking, or the way your consumer base might be similar or different from others, or treat this age group or demographic of your customer base in a certain way, but focus on a different approach over here, given the data that's been collected. I think a lot of people were waiting for this day to come, and now they're soaking in that information for their use.
Absolutely. Are your member organizations using COVID-specific questionnaires for the underwriting process, or do you see that, improving in the future?
I mean, I think some of it is just similar to if you were to now enter a healthcare facility, or if any of you are visiting family members who might be in an independent or senior facility. There are these types of questions that become more common. Travel is certainly one of them. Have you been overseas, or what type of travel have you done in recent days or weeks? That becomes a more specific question that gets focused on. Some of that may already been built into the underwriting question of the application anyway. So I sense that it may not be, we need to layer on this absolutely totally brand new COVID specific questionnaire, but making sure that we're focusing in on the answers for travel and interaction, and would that need to expand to additional questions as we, return to a new normal, as people move back to an office building or a production facility. Are there additional specific questions that you might need to ask about the place where they spend 8 to 10 hours a day that can impact their health and ultimately their mortality?
So I know you mentioned your member organization's response to COVID earlier, but I'm curious, what have been the reinsurers' response to COVID and the pandemic?
I think it's somewhat similar to direct writers, although, their clients are the direct writers. They're quickly going back to make sure, all right, what are the underwriting guidelines that we have in play for this particular risk that our direct writer, who then cedes the business to us, is using. I think we saw that quite a bit more on things like simplified or guaranteed issue policies. Making sure that more than ever you're paying attention to runs on the business. If all of a sudden I'm getting 30 apps from one specific zip code, I think reinsurers and direct writers are trying to work in combination to say, remember, we have these types of rules in place. They facilitate that cession of risk. Here's the financials of why we can accept that risk or limit that risk. You just see a lot of reinsurers doing that type of underwriting questioning as well. And then, of course, on their asset side of the balance sheets, running through the same exercise. What's my capital position? How much new business can I afford to take on? What's my risk tolerance? All those coming from the reinsurance community.
Absolutely. I'm curious, what are the resources for the audience on this call that the SOA provides in regards to mortality rates or managing these new risks?
Well, yeah, I mean, if you go to some of the research briefs that we've published on the SOA website, a lot of them are mortality focused. I think a lot of the current information, though, comes from just general population mortality. And as we all know, there's this translation of what's happening in population mortality down to actual individual insured books of business in insurance companies. And there's a couple resources out there, our large research brief, but also the way that we've been tracking like influenza and pneumonia happening in the population and the way that translates into good or bad flu years for the insurance industry. There's data that we've collected, that the ACLI, the American Council of Life Insurers, has collected that starts to give an indication of what that translation from statistics you're hearing on the news every night might be down into your individual book of business. So it's the appropriate time, and I'm sure actuaries study this all the time, knowing your book of business. What's my age demographics, the duration of my policies, the underwriting that I've done, and how does that, what should I be aware of? How should I use that to improve my mortality assumptions for better estimation of financials? All that is coming into quick play today.
Absolutely. So I mentioned earlier, the need for digital distribution, especially in these new pandemics and black swan events. How are your member organizations adopting, omni-channel and mobile communication to engage with your consumers?
Yeah, the innovation in technology has really become, over the past 10 years, very intertwined with the actuarial profession, not only with machine learning, artificial intelligence, but the way that actuaries then come into play with the normal operations of insurance companies has been that way as well. So understanding what distribution through digital channels can be, the way that translates into, is it exactly the same risk if a client comes to an agent's office to fill out an application versus that being done electronically? What are some of the nuances of those types of risks? I think the actual profession, is engaged with all the other areas of the operating companies to make sure they're understanding how this all plays out. But now is the time, if not already, to get further into those types of details, to do more risk management as we transition potentially more from a face-to-face communication with distribution direct into my living room here to fill out a new application for a life insurance product.
So I'd love to hear a little bit more about the member organizations of SOA and maybe the breadth of your members throughout the world.
Yeah, 30,000 plus members all around the world. 2/3 of them here in the United States, but clearly that means there's another third of them in other places. Canada is another main place for our members, maybe 15% of our membership in Canada. But really the strong and growing places are places outside North America, particularly places like the Asia Pacific region, where China and Hong Kong and Taiwan and Singapore are really big markets where we have a lot of members, and companies are growing, demanding more actuarial talent. The same is happening too in places like Latin America and the Middle East. So we're doing a lot more studies recently on what are the opportunities for insurance companies, for protection, for retirement products in Latin America? What are some of the nuances to look out for in the Middle East? So, a lot of places where there are growing populations with growing wealth to protect and growing age distributions heading towards retirement, that's where we see a lot of actuarial work happening.
So Dale, I'd really like to thank you for taking time out of your afternoon. And the SOA plays such a pivotal role in helping insurers around the world help manage their risk and actuaries manage their risk, like you mentioned, throughout the globe. So I'd like to now introduce Rachel from our InsurTech team, who will start to introduce the startup presentations. Thanks again, Dale.
Thanks, everyone.
Great. Thanks so much, Ash, and thanks, Dale. Excited to have everybody back. We have 3 really exciting startups to show you guys today. Quick little housekeeping items. Please remain muted and camera off unless you're presenting, of course. And remember that our startups do have some Q&A time allotted in their slot. So please submit some questions in the Q&A bar below. The chat function also works. And there will be a poll following each startup. asking if you'd like to connect with them. Happy to make some introductions after the session. But without any further ado, I want to bring James on from Predictive Health Partners. Can you hear me, James?
Yes, I can. Thank you.
Awesome. Take it away.
All right. Can you see my screen okay?
Looks great.
All right. Well, thank you. James Lewis, founder and CEO of Predictive Health Partners. And we'll be sharing some ways that we have come up with to predict and prevent wasteful healthcare spending, and in particular to save time, money, and lives. And so I begin by saying that most everyone is probably pretty familiar with the challenges we have in healthcare. It's very ripe for disruption because as a consumer, we don't know the prices, we don't really understand quality, and lots of bad things happen. And in particular, as carriers and insurance in life and disability in particular, we all are challenged because we cannot get access to the carrier's price and data. And so what we've done is come up with a way of really looking at what is the other problems that are driving risk. And in particular, medication overload is a huge factor. It starts because we have this syndrome of just a pill for every ill. We have individuals that are really not as equipped as pharmacists in being able to manage medication. And we get a highly fragmented system so that we have lots of different people, lots of different providers that are writing prescriptions. We get them by 3 or 4 doctors at 2 or 3 pharmacies. And what happens is we end up with this very overprescribed and an aging population. So this may surprise some of you, but 40% take 5 or more prescriptions and 20% are taking more than 10 prescriptions a month. And it's interesting because we end up spending more money trying to manage this and correct it than it did even spend the money in the first place on the industry. You also have a very small percentage of the entire population that has actually ever had what's called a medication review, a comprehensive one. And I'll talk more about that. So from a life and disability standpoint, especially life, this is why you should really care, is that this is a growing risk for you. You have about 59% greater chance of death if you're taking 6 to 9 medications, and I just shared how many those are. If they're taking 10 or more, which you might be surprised how much of your population is, that's 96% greater chance. So I've been working in very complex customer industries my entire career, and I decided to do something about this problem. Working with large pharmaceutical companies previously as clients, I felt like it's time to change the tide. Let's shift this. So I brought on a series of great team members that are strong in data, in marketing, and engagement, because we feel like it's really 2 pieces of the puzzle. In addition, we brought on some great healthcare experts, both on the advisor side, but in particular in the PharmD. And Mike Case-Hobb is probably the single most authoritative figure on medication review in the country. So what we did is we developed a platform called Benjamin. And Benjamin is all about helping individuals not waste money. And we had good growth in this past year, especially. We had some nice companies that have come on board, and we're building out even additional technology. We were involved in 2 accelerators last year, the Global Insurance Accelerator and Generator, that really opened some amazing doors for us. And the way we go about this is we start with detecting and understanding where is the risk coming, and then we empower individuals to be able to save money and be able to prevent bad things from happening. So what makes this unique, in particular for this industry, is that you are challenged to be able to get access to health claims data. We have access through a portal that we have licensed that has more than 200 carriers that we are connected with. And that is allowing us to get individual members' medical and prescription claims through a permission-based strategy. We apply our algorithms to identify where is the high risk, and then we engage those individuals with data-driven interventions that save those individuals money and ultimately saves their lives. So Benjamin is really a very robust platform. It can do a lot of things. I'm going to kind of focus on a couple of very specific things that it can do. But one thing in general is that this is where healthcare, more than 50% of healthcare is in this routine spaces. And we overspend on prescriptions. So we have an ability to reach out to individuals. For example, if you were to give us your member list and we were to invite them, we could help them with this tool. We would simply need a phone number and an email, and they would sign up. The other thing we would do is they would then give us access to their medical, dental, and vision claims and prescription claims. And the way it works is that they basically select their carrier and they give that access to us through the username and password. They give us permission. We make it very clear what and how we would use it. And with that, we can now give them access all in one spot, all of their claims data. What that allows us to do is help them. Helps us identify where are we at higher risk and how can we prevent bad things from happening. So at this point, we can start to do a number of things. An individual, we can help them save money even on prescriptions because we are free to be able to communicate where there's better savings. So for example, if you wanted to save money, and typically we find about 80% of the time, we can save money by using a prescription savings plan, similar to like a GoodRx, that's what we have. And you're able to find about 80% of the time you'll find significant savings. There's a good example right here. But as it relates to your industry in particular, this is really the golden opportunity. It's medication reviews. Very small percentage, again, have had these. What we do is we offer that to the members that are at higher risk of an adverse drug event. And what we do is we help them get scheduled with our pharmacists. Our pharmacists, I'll talk more about in a minute, are able to then do a detailed, comprehensive review with these individuals that many of them are on chronic conditions, they're on multiple polypharmacy, and we're able to help give them that advice they desperately need to keep them from having an accidental overdose. So we have more than 400 licensed pharmacists on our team in all 50 states, multiple languages, all kinds of certifications. And what we're working on right now is actually 3 things that I think are interesting. One is with Delta Dental, helping identify individuals we should try to help improve their oral care and their medical at the same time. Allstate, we're in an interesting project with them where we're evaluating savings to help employees shop and save for money. And this last one is very relevant. WA Trust has 100,000 members in the state of Wisconsin. And what we're doing is we're actually predicting and preventing, just as we've been talking about here, for the top 10%, and we're de-prescribing. And the teachers who are their members save roughly about $450 for each time we engage them on saving on unnecessary prescriptions and even lowering them to more affordable. So what makes us unique, we're using a permission-based secure connection, and we're able to get access to the data. We're able to then predict and prevent and continually learn and get better at this. And then finally is how we engage the members. We engage them, reward them, help them save money by reducing their risk. And we can generate validated savings models to be able to show, because we have that ongoing data, claims data, and it's all in a HIPAA compliant platform. So I'm going to open it up now to questions, and thank you for allowing me to speak here.
Thanks so much, James. A few questions here. Well, to start, I know that you're trying to find a life insurance carrier to help launch this with you. What does that ideal partner look like for you?
Yes, thank you. That's a great question. So we very much, even on the 3 pilot programs we've done, in each one of those, we've very much collaborated with our clients. So an ideal client would be someone who has a vested interest in helping increase the longevity of their members, who maybe have a large number of members and might be a little bit more innovative, forward thinking. This might be an opportunity to kind of bring what other industries have done with the safe driver discount, where you could perhaps offer an advantage to your members for collaborating with them and helping manage their health. So we're very open to this and very much wanting to get some individuals to help us also on the actuarial side to really be able to prove out the model.
Great. And any successful customer case studies that you're able to share right now?
So we've had a few that we've worked a lot with the employee engagement side of the business and really understanding what triggers that. So we've had good success on that side. This is brand new, and I'm not sure that I've never heard of anyone actually doing this in this particular segment, which creates, there's maybe we're looking for the early adopters, innovators to kind of embrace this. I would say that the experience we're getting right now with WEA Trust on doing this, the de-prescribing, is very encouraging. We're just getting started, but check back in about a month and I'll have some very specific numbers on how much their ROI was.
Awesome. And one more, I guess, from viewers here. Are you currently raising?
We are currently raising. Thank you, whoever was asking. We're raising $1 million. We've raised $250 so far. And we will be using that to really get ourselves ready for a full launch in 2021 first quarter.
Awesome. Well, thanks so much, James. And reminder to everybody tuning in, please let us know via the poll if you'd like to reach out and touch base with James, or feel free to reach out to myself or Ash. But thanks so much.
Thank you.
Great. And now I want to welcome Russell with One Milo. Can you hear me, Russell?
Yes, hi.
Hi, welcome. Take it away.
Okay, you're going to start the video, yeah. You need to start the video?
Give us 1 second then.
Okay. Hi everyone, I'm Russell Lee. I'm the CEO and co-founder of One Milo, based in Miami. This rapid antibody test, our instant rapid COVID-19 antibody test, is probably part of the reason why we've been asked to present here today. Let me share my screen and give you some more information. So Instant Rapid is our rapid antibody test. It's made in the United States. It's highly accurate, and it's currently under pre-EUA EUA submission. It's accurate around 98%, and we're making it in South Florida at the moment, about 35,000 per day, and looking to open up about 4 to 5 other facilities around the United States to make a production of about 5 million per week. So what do you want to know about the instant rapid antibody test? Well, first of all, yeah, it's under the FDA's EUA, pre-EUA submission at the moment. Instant rapid antibody test is a qualitative immunoassay for the rapid detection of IgG and IgM antibodies to COVID-19 in finger prick, whole blood, plasma, and serum. So what we did is we asked the FDA if we could take home use for our rapid antibody test, as opposed to points of care at a doctor, a pharmacist, or in a clinical lab. And we said to them, there's pretty much 3 main reasons why you would want home testing for these tests. The one important thing is that anyone can perform these things. And also the cat is pretty much out the bag. Everyone now wants an antibody test because we all need to know. We need data about our family, our social circles, our colleagues, and our communities. We need to know who is immune and how far this virus has really spread, and who needs a vaccine when one becomes available. The other reason we said to them is, why would we want to expose doctors and nurses to potential patients who have acute version of the disease or infectious, and that's a risk for something that anyone can do at home. And there is some legacy reasons why the FDA wants certain tests to be performed by a medical professional. And then the third reason was, during this public health emergency, we're turning a $10 test that someone can do at home into a $100 doctor visit. Because One Milo is set up a distribution channel which is direct to customers, and we have a one price policy that everyone pays just one price, and we deal in directly with customers and pretty much no distributors, and the doctors need to charge for the visit, and that becomes a really expensive exercise for anyone who wants to do a simple rapid antibody test. And then we said to them, let's also talk about good medicine. And we did a trial at Nicholas Children's Hospital. And one of our first tests that we performed on one of the children was on a PCR confirmed negative patient. So this would be a patient that's in the side of the hospital who is a COVID negative child. And we found antibodies. So the doctors came to us and said, is this a false positive? And we determined that it was not a false positive. It was a convalescent antibody. The child who was COVID-19 positive was also PCR negative. So on this graph, which I put on up here, you can see that a PCR is the first line that spikes up in the black, and it becomes less effective after about 5 to 6 days. So patients who become PCR negative, we now need to check them for antibodies in order to be properly assess them. So it becomes a very good tool in the hospitals as well to diagnose and look after patients. So there's all these good reasons for why we would want antibody testing on a wide scale. And the FDA said to us, you know, this is really good data, and we see you sailing through the EUA process really well, but no to home testing. So then we spoke to the FDA about who we really are. We're not a COVID-19 product company. One Milo started 3 years ago, and we developed a connected health ecosystem, which is powered by proprietary systems for point of care and self-diagnostics. The purpose of our connected health ecosystem was to deliver precision medicine to mass populations for the purpose of bringing clinical and economic improvements to patient care. Okay, so for the last 2 years, when we were chosen by NASA ITech to be in the accelerator, which we won, or when we were chosen by Generali Insurance as one of 4 companies to represent the future of health and welfare, and join their accelerator, the first line of our elevator pitch for 3 years, the problem, has always been that labs cannot conveniently and economically provide point of care testing for chronic care management, or address the globalization of infectious diseases. So never before has that term been underestimated. Labs cannot effectively and economically provide point of care testing for chronic care management, and they can't address the globalization of infectious diseases. So that's what One Milo has been talking about for 2 years. So when we presented our solution to the FDA, they said to us, this is pretty much the best home testing solution for COVID-19 that they have been presented. And they see no problem with us through an EUA submission for home testing, which we are going to do in very rapid time, okay? So what our connected health ecosystem combines is a credit card size handheld analyzer for a smart rapid test, which is the test strip is a smart version of our lateral flow antibody test. The wireless smart device doesn't have a display on it, which means that every time it performs a test, it analyzes that test strip. The result is wirelessly synced to an app and then to the cloud. That means we capture 100% of the data. That also means that when you perform the test at home, that if it's a class 3 diagnostic like COVID-19, the app will lock the test result until it's shared with your physician. And that is the way the FDA wants to enable home testing for labs test for COVID-19 and other things. Our system enables over 100 different, is enabled for over 100 different at-home rapid lateral flow and vertical flow devices tests, including a quantitative cholesterol and total cholesterol and HDL, and a new quantitative doctor's office vitamin D test, which you can perform at home. So the connected health ecosystem was designed specifically as a service for big insurance companies to cater for complex chronic diseases. That is, patients who need to be, who really don't care. They're probably diabetic, they're probably overweight, do not exercise, don't care to test themselves, and they probably also have cardiovascular issues as well. So the insurance companies didn't want a product like our device and the rapid test. They wanted a service that would monitor the patient's health, create a care plan for the patient, and then monitor their compliance with that care plan over time, with a system connected to e-commerce that would ship test to the patient and monitor their compliance. And that's what we generated. That's what we've developed over the last 2 years. So we created a system for insurance companies to monitor the most expensive part of their bottom line, which is complex chronic care patients. We developed inside our system. We developed care plans, an HRA, which is the health risk assessment for each patient, and also for the population. And that's non-invasive. So as soon as we have certain data from the patient, we create this health risk assessment for the patient, which is basically his vital age and compared to his actual age and his forecasted age. The proprietary test strips, which we call Smart Rapid, seamlessly report the test to the cloud, where medical professionals can review results in real time in centralized locations from any time and anywhere point of care testing. So a little bit about who we are. The company was co-founded by myself and actually my brother. My brother is a radiologist. He went to Boston University Medical Center where he interned, and then he did his radiology residency at Harvard Medical School. Our CMO is Dr. Mark Schlangle. He went to Columbia University and Yale School of Medicine and School of Management, where he also obtained an MBA. And Dr. Brian Kravitsky, who is on our board and an investor and a partner in the radiology practice. So we have a really good team that is working really hard with the FDA to clean up rapid antibody testing to the point where we can use whole blood at-home testing synced live to insurers and care providers. And I hope that message is quite clear. Thank you so much.
Great, thanks so much, Russell. A handful of questions here.
Yeah.
First is around volume. So how many tests can you guys currently take in a day, and what other types of diseases can you screen for?
Okay, so just on COVID-19, we re-geared to manufacture COVID-19. We can manufacture 35,000 tests a day in our facility in South Florida, and we'll move that up to significantly higher. Our only bottleneck at the moment is packaging, and we're receiving packaging machinery in the next 6 weeks. We are also setting up manufacturing in 4 other facilities in the United States. So the whole proprietary system, our intellectual property, starts from the device and the software ecosystem, the connected health ecosystem, which connects the patient to the doctor or the care provider or the payer or the employer under a self-employed network. And then we also do have our own IP on the chemistry. So COVID-19 antibody test is our chemistry. We do have a few other chemistries that we own, and we also license a few other chemistries. So in total, we have about 100 different rapid tests that we can put onto the system. The handheld device is universal and it's smart. So depending which test strip you insert into the device, it will understand which test it is and perform that test and present it. Also encoded on that smart test strip is the doctor order. So if my doctor or my insurance company or my payer ordered this test for me as part of a care plan, as soon as I perform the test, the result is in the cloud and with the doctor. As opposed to if I just buy the test myself for my own purposes, then the test is in my control. So there's a lot of really good functionality involved in this connected health ecosystem.
Got it. And maybe what does that look like for home testers, specifically the pricing around the Smart Rapid Test device?
Okay, so our device will wholesale for about $45, and on that device will last for years, like it recharges, and it can perform thousands of tests. And each test will cost between $5 and $20 per test. So our most expensive test would probably be a 3-panel cholesterol test, which is total HDL and triglycerides on one test strip. And that would be about, that would wholesale for about $20 to resellers. And you know, the cheapest test is a glucose test, which is about 50 cents. Okay.
Got it. And with all of those different, test models in mind, roughly how fast are life insurance carriers able to receive the results that you guys process? Did we lose him? Okay, well, unfortunately, it looks like we lost James, but please let us know if you'd like to connect. Excuse me, Russell, please let us know if you'd like to connect with him. Happy to answer the rest of the questions that we have one-on-one. So for our last startup of the day, we have Chase with Gradient AI, unfortunately unable to join us, but we do have a video for you.
Hello, this is Chase Pettis with Gradient AI. Wish I could be in person or at least via webinar, but had to do this recording. So thanks for the opportunity to pitch to you. Gradient AI is an advanced decision support and workflow automation predictive analytics company powered by artificial intelligence. Before we get into more about Gradient AI, let me just give you some context of why we exist. Prediction. This is from McKinsey. Manual underwriting ceases to exist in 2030. Underwriting is reduced to just a few seconds. Underwriting process is automated, supported by machine learning and deep learning models. Prediction. This from Accenture. AI is set to take this competition in the market and specifically insurance industry to an entirely new level. Insurers expect AI to completely transform the way they run their businesses and the way they build their products and the way they underwrite their products over the next 3 years. Conclusion, AI is going to transform the way that leading insurers of tomorrow organize, run, and grow their businesses. And a very key central point to this process, according to these leading consulting firms, increased efficiencies, increased speed, increased precision in underwriting, pricing, and risk selection will be fundamental to this transformative change. And this technology is already here. Hi, we are Gradient AI. So the real question is where will your company be and who will your company be partnered with in the next 3 years? Gradient AI is an AI machine learning software company focused entirely in the insurance space. It's all we live, breathe, do every day. We build models, we train models, we test models, and we put models in production in the benefits space, in the insurance industry, and then also on the P&C side. Gradient provides AI, machine learning, predictive analytics solutions that help empower these companies to go to that next level. We accomplish this through a suite of underwriting and claims predictive analytics solutions that address core underwriting and core claims business problems. As you can see here is when we're going to look at how we help increase from a precision standpoint, we increase efficiency and we increase speed in the underwriting process. This analysis is comparing traditional underwriting approaches versus our machine learning empowered AI underwriting models that have been trained on massive amounts of data, including a bunch of third-party data. We're able to incorporate both structured and unstructured data into the underwriting process. And the results, don't have time to dig into the details, but those results should be pretty obvious as you see the segmentation charts from on the left and right side of your screen there, and the predictive value and the predictive lift that our models are able to find on using the same policy submission information, but empowered by different machine learning technologies from a predictive standpoint, and then also the data that's feeding those models that result in much more significant differentiation between the different types of risk within this group of policies, and the difference of being able to highly accurately identify those risks that are going to be on the far right, those policies that are going to be your unprofitable accounts, from those policies on the far left that will be your most profitable accounts. Increased efficiency, leveraging good technology with great models. And let me just show you a quick demo to see, so you can see what that actually looks like in the live here. So we're going to pull up a file, upload a census. The census is for a benefits underwriting account where we have a benefits model that's looking at group medical and making a prediction on the underlying risk and the future expected claims on that risk, and then tying it into a risk score that you'll see in a second. We'll call the model here using the census only submission, first name, last name, date of birth, gender, zip code. That's pretty much it. Model is called, as you saw, scores coming back. This model has been again trained on data that is pulling from several third-party sources where we're getting RX history information on the population that was submitted on the census, getting medical claims, getting blood pressure readings, high cholesterol readings, and the model has also been trained with additional social determinant data, so we have a much more holistic picture of the underlying risk. All that is going into that model that produced that score that fast. So obviously you see the increased speed, the increased efficiency, and the increased precision that Gradient AI provides. Now a little bit about us at Gradient AI. We're as a team of data scientists, software engineers, technologists, and insurance industry experts. We're based in Cambridge, Mass. Our customer base, as you can see there on the screen, a bunch of carrier, insurer clients, TPAs, and risk pools. And we thank you for the opportunity to present this to you. If you're interested, we'd love to talk. Thanks again. Bye-bye.
Great. And with that, I want to thank all of our speakers today. Thank you to Ash and Dale, Russell, and James. And please let us know if you'd like to reach out to Chase and the team at Gradient AI. Thanks everybody for joining us here again. Hope to see you next week. We'll be talking about the impact of the future of workers' compensation. But we'd love to hear your suggestions and your feedback. Feel free to reach out to myself or Ash below. And if you'll stay on, we have a few questions we'd love for you to answer. Thanks, everyone.